Okay, here we are. So this module is going to give you the knowledge about letter of credit. So letter of credit is a international payment method. Okay, so we are going to see a lot of things about letter of credit, the obligation, risk, benefits, the uniqueness, and the letter of credit cycle. So this will be the first class. After that, we are going to cover important shipping documents involved in letter of credit trade. So you might be knowing a bill of exchange, invoice, packing list, then bill of lading, then airway bill, then certificate of origin, insurance document. So these are all the major shipping documents which will be involved in any kind of international trade. But when it comes to letter of credit, there are certain rules which governs this LC process. So LC is unique and special. You will come to know that why it is so special when we go through the session. Okay. So end of this course module, you will be knowing or you will be able to prepare the shipping documents satisfying the LC requirements and certain rules governing letter of credit. This is so important for an exporter. So presenting a complying document, the shipping documents which satisfies the LC condition and rules condition is foremost important or very important mandatory thing for an exporter to get a protection from the bank. Okay, so we have set the tone and this is what we are going to achieve. So before we move on, any guys, any doubt from you? Any clarification or anything? Please raise it now. You can go on. Don't worry that the question may be silly or something like that. This is going to be an interactive one with our friends. Okay, so feel free, feel comfortable. Don't hesitate to ask.
Yes, still no problem.
Okay,
You can carry on.
fine. So let's move on. So before we move into documents, let us understand what is international payments and what is trade. Okay. So you guys know that there is an exporter who is going to ship the goods and there is an importer from another country who is going to make the payment. Okay, before I continue, is my voice and face okay? Should I slow down or should I pronounce it slowly or something like that?
Okay, no problem.
It's all good.
Okay, thank you guys. So let us understand what is the payment methods available. So you know that goods and payment, goods are exchanged for payment. So now there is a lack of protection, the insecureness, because in international trade, the parties are governed by different laws. So if a Chinese exporter, the Chinese laws will be applicable. And if there is an Indian buyer, then the Chinese exporter will not have a protection because this Indian buyer is sitting and governed and ruled by some other law. So now there should be a common understanding, a standardized principle wherein all the players around the world, they follow a standardized rule. Okay, so everyone come to a common conclusion. Okay, we will follow this. Right? So this is where the complexity of international trade arises. So how to trust the another person? Is there a common person or is there a body which can secure my goods in case of failure? In case the importer is not paying me, will there be a person who can pay me back? Because I don't know who's this person. I don't know about the country's law. I don't know anyone who can come and help me in case of distress. So in this scenario, how I can do an international trade? So this is where the ICC comes into picture. So ICC is nothing but International Chamber of Commerce. So this body, this is a non-profit organization developed by the exporter and a lot of banks and financial institutions. So this ICC work very closely with various international governmental bodies like WTO, the G7 countries, and what else, like the UNICEF, like UN. So these people work closely with all the other governmental bodies, and they issue a lot of publications to have a common standard trade practice to develop trade across the international borders. Okay, so this ICC, what it does, they will set some rules for the players to follow. So one such rule is called UCP 600. So Uniform Customs and Practice for Letter of Credit. So there are a lot of versions which will be there. So now the latest version is called as UCP 600, and this is the 7th revision. And ICC has been start functioning from 1929, and the first rule was issued in 1934. So what is the benefit of the rule? That rule will give the obligation for a party. So if there is a issuing bank, so issuing bank is nothing but a bank issues the LC. So it will set a certain obligation for that bank. So if you are acting as a issuing bank, you need to follow certain conditions. And if you are a conforming bank, then you have a set of rules. So they define who is beneficiary, they define who is applicant, and they define how reimbursement between banks to happen. Not only that, very specific and very beneficial thing for exporters and importers is they give the mandatory requirement for any shipping documents. So invoice, there is a commercial invoice, you should be knowing. The exporter raises on the importer stating the amount, currency, quantity and all. So UCP gives certain mandatory things which has to be there in the invoice. That is covered in article. So in fact, UCP has 39 articles. So each article will explain certain things. Likewise, bill of lading. So we have majorly, 4 types of bill of lading. So one is multimodal bill of lading, another one ocean bill of lading, another one charter party bill of lading, and then we have, airway bill. Then we have road transport document. For each and everything, UCP clarifies and they give some mandatory things. And this is what we are going to learn. And we will not be able to learn UCP 600 in this 5 days. I'm going to give the crux of the documents alone. So when invoice comes, my training will give you what are the mandatory things. So I will be giving that in a mandatory point wise. Say for example, invoice 4 to 5 points will be there. So when you prepare an invoice, you need to consider all those 4 points. Then if it comes to bill of lading, there are 9 or 10 mandatory points. So that I will give. So my training is going to give you the thumb rule. So if it is a bill of lading, what all the things has to be there. Fine, guys?
Yeah.
Any
Okay.
doubt? Okay, thank you. So in this short period of time, you will not be able to understand UCP fully. And there is another publication called Incoterms. You should be knowing. Incoterms is nothing but, 3 alphabetical abbreviation, which will give the risk and responsibility of an exporter and importer. So when you use an Incoterm, that will tell the exporter that until which point my risk will be there. Okay. So then we have ISBP, International Standard Banking Practice. So this is nothing but a explanation for UCP itself. So we have 39 articles in UCP, as I told. So people interpret it in different ways. So a person in India, he will consider and define a particular article in a different way. But the same article, a person in Italy, he will interpret it in a different way. So due to this, lot of discrepancies, issues comes, and they have to go and refer that to ICC, saying that this person has acted wrongly. Then they have to come and say that, no, this is the right way to do. So because of that, person A is correct or person B is correct. So there are a lot of denials, a lot of trade barriers, a lot of delays, which spoils the international trade. So to address this, ICC issued a publication called ISBP, International Standard Banking Practice. So this is a explanation, so which will give some examples like how you need to interpret this. So in our 5 days, we will not be able to cover all these things. So as I already told, we will see the mandatory points. I will give you the thumb rule. So with that, once you start preparing the documents, you can incorporate all the requirements. So but after some time period, you will not even need the mandatory points. So that will register in your mind, and you can prepare the documents in a complying manner. So we are going to see how important the complying presentation is. Okay. So before we understand, letter of credit, we will see normal payment methods, which is there in international payments, international trade. So the famous one is open account. Okay. So open account is the commonest one, and which is less complex and cost effective, which involves very less cost. Open account is the traditional form where the exporter will first ship the goods and the importer will make the payment at the next stage. So this is very common, and year along we have been doing this way only. But here if you see, there is an open risk for the exporter, because exporter is shipping the goods first, expecting the payment from importer then. But what may happen? Importer may reject after taking the goods, or it may pay them off, or the importer might be a fraudulent one. After getting the goods, he may run away. So this is not the right method for a new exporter and new importer. In fact, for new exporter, this is not the right method. But people use open account, and open account has the maximum share in international payment. So it has almost 75% people use open account trading, because the exporter and importer, once they have built some trust after doing trade for 2 or 3 years, they come to this one where there is a trust behind it. So they want to reduce the cost. They want to reduce the complexity. So complex is, letter of credit is little complex. We will come to know why it is so complex. So they want to avoid this complexity, cost, and open account is also very easy and quick. But open account will not help exporter, a new exporter, when he is entering a new market. Okay. So before we move to the next one, I just want to take a pause for your questions. Are we good as of till now?
No problem.
Shall we move on, guys?
Move on.
Okay, thank you.
I have a question.
Yeah, please.
In open account, there has risks, right?
Open account?
There have risks. If importer send the product, sorry, if importer receive the product, then did not he want to pay? I think it's have a risk, right?
You mean breach, is it?
Risk sector.
No, I don't get that point. Which sector means?
In open account,
Hmm.
importer, right, manufacturer send the product and importer receive the product, and if product is not good, they can reject, right?
Correct, exactly.
They can reject, and he's not sending the payment,
Correct.
right?
Yeah.
Right. So I think there have risk sector in here,
Okay.
right?
Hmm.
Okay.
Yeah.
That's
So
it.
basically, the importer has the right to reject the payment after receiving the goods, but the exporter will be looking for the payment. After shipping the goods, he will be sitting in his office expecting a payment today or tomorrow. but the importer decide not to pay after seeing the quality of the goods. So sometimes the importer is not okay with the goods,
Okay.
or importer may want to cut the trade itself because of some, a communication gap or some, a gray area or something has happened between the importer and exporter. So the importer decides to stop the trade at all. So what he will do, the final trade, he will not make the payment, saying some silly reasons, saying that, quantity is 1 kg less, or the performance of this engineering product is not expected. So the UPS battery, instead of 1 hour, it is standing only for 45 minutes. Some silly reasons he will say and he will reject.
Okay. Okay.
But you need to consider the risk of the exporter. So he is sending the goods on a trust that importer will make the payment. Now he will be out of money and he may be out of business itself.
Okay.
Yeah.
Got
So
it.
now we move to advance payment. So advance payment is a totally opposite one for open account. In advance payment, as the name says, the importer first makes the payment, and only then the exporter will ship the goods. Once the advance payment reaches the Benny's account, the beneficiary or the exporter, after that it will ship the goods, prepare the shipping documents, and send the documents directly to the importer. So as you see, the risk is more for the importer. Okay, after receiving the goods, the exporter may not ship the goods, or exporter may ship off goods, a part goods, or exporter may do something in the quality. Okay, instead of putting a 1 hour UPS battery, he may put 30 minutes UPS battery. So exporter has the chance to do all these things. Now importer will not expect to do this when he is not trusting the exporter. So again, here, if advance payment is going to be in a new market, then this is not the right advised method. You agree with me?
Yes.
Yeah, so advance payment will exist where there is a trust already built between the exporter and importer, where they have been doing successful trade for 1 or 2 years, or 10 or 15 shipments has been already received properly and paid properly. Okay. Let's move on to the next one. Collections. So far, we have not introduced a bank in this.
Adi,
Yeah, you're saying something, Isa?
yeah, I have a question. A customer, they can make bank transfer, or they can like pay with a Visa card, credit card, or do we accept PayPal? What's the method, payment methods, I mean?
Yeah, so the payment method can be anything. So it is up to the exporter who is receiving. So if exporter wishes to receive in PayPal, they can do it. Or if he wants to receive that in TazaPay, they can do. But always suggested is using a bank, because there are a lot of benefits when you use bank. So the banks are the trusted party in the trade, and governments give entrust some work to the banks. So government cannot directly monitor all the incoming and outgoing payments, incoming and outgoing goods. So they will entrust certain duties to certain other trusted players. So bank is a trusted player which will handle the payments incoming and outgoing. So even though you use a PayPal or TazaPay or any other fintech company, finally it will go and hit a bank, and bank will be the person who will be giving the final realization certificate. So any country, so this law will be common for any country. So any goods going out of a country, that should be accountable. So the country will be keen in seeing whether the payment as the equivalent payment has been received for the goods gone out. Correct?
Yeah.
So whether you receive payment via PayPal That PayPal will be maintaining an account with the bank. So that final bank will be the person who will give you the realization certificate. So the foreign
Exactly.
fund incoming, the banks will issue a certificate saying that I have received so and so money. So as an exporter, you might have to return or file this in some government website wherein you will match that I have shipped goods worth 1 million and I have received money worth 1 million. So now my goods and payment received are tallied. So now my trade is ending. So this is how the goods outgoing and payments incoming has to be matched. Got it?
Yeah, I see. So how about in Turkey, we have a taxes, and if we import products from out of the country, will be tax free or they have to pay? Because if we make bank transfer, we have to provide a pro forma. So we have to show it even for the government.
Yeah, that's right. So any country, they will be keen in doing the taxes. So this will be handled by a separate government body. See, for example, in India, we have customs authority. So customs authority is a governmental nodal body who will take care of the tax related things. So in India, all the imports will incur a customs tax, but exports, there will be no tax. Okay, so the tax will be governed by the particular country's governmental policies. So if you need to understand what taxes will be applicable, there will be some regulations or PDF notes which will be given to you. So any importer which imports the goods, there will be HS code. HS code is nothing but harmonized system code. So it's an internationally governed number given for each product. Okay, so it will be a 6-digit or 8-digit product where it will say like the first 2 letters will be a common criteria. Say for example, leather. Then the next 2 will be saying that what group it contains. So maybe bags. Okay, or it may say some structured things. And the final 2 item will determine what the exact product is. So your HS code will be a 6-digit letter. And you need to type in that HS code to find out how much customs tax it applies.
Okay. It is the same with Turkey, I think. Even Turkey, it's like that. If you export, you will free tax.
Sorry?
If you import, I mean, if you export the products, you don't have to pay the tax.
Yeah, right. Most of the countries, almost all countries, if I'm sure, they want to promote people to export rather than import.
Exactly.
So to promote it, most of the countries, they give tax free for exports only for certain prohibited items like, sugar, rice, where they have to, control the production or they have a local demand. So they cannot, ship the commodities when, say, for example, rice is there, right? Rice is a commodity where your local people needs that. And if the producers, they keep on exporting, then the local market will be having high demand. Then the people have to pay more price to buy the rice. So government will try to restrict or do a prohibited trade in certain products. Okay, so your export and import will be dependent on the country's policy, but most of the times export will be having no tax.
Yeah, thank you for the information.
Yeah, sure. And this is called as duties. So export duty and import duty. Okay, and you have another tax which is called income tax and GST. Okay, so GST again, goods and service taxes. So if you sell any tax, then as a supplier, you may have to pay a tax, or as a buyer, the buyer may have to pay a tax. Again, this is also governed by the local country regulations. Okay.
Okay. Thank you.
Yeah, sure. So we will move on. So as of now, we have not introduced banks in the method. So open account, advance payment, we have not introduced banks. But collections, there is a small role played by a bank. So I'm mentioning small because in letter of credit, banks are going to play a big role. So let us come back to collections. So I told small, it's nothing but bank is just going to act as a agent. So bank is not going to take any undertaking. It will not give any promise. It will not give any guarantee. So bank will just play a agent role wherein it will receive the documents and it will deliver the documents to the importer only when it pays the amount. So the documents will be reaching at the importer's bank's counter. After receiving it, the bank will call the importer and tell that I have received the documents. Then if you make the payment, I will release the document to you. Okay, so that will be a site collection. So if it is a 10-hour collection, wherein 30 days after bill of lading, so only then payment has to be paid. Or it could be 60 days after BL date. So in this case, the importer bank will say, there is a document which I have received. This is 60 days BL date. So give your acceptance, sign the draft and take the delivery of the documents. Okay, so this is a documentary collections. Fine. So this is use-on's documentary collections. Okay, so here bank is not giving any undertaking. Rather, it just acts as an agent wherein it will follow certain instruction received from the exporter's bank. So that instruction is nothing but only when you receive the payment from the importer under a site collection, you deliver the documents. Or only when you get the undertaking from the importer or get a signed acceptance from the bill of exchange from the importer, then you release the documents. Okay, this is called collections. So here banks just play a small role. It doesn't give any undertaking. So if something goes wrong, people cannot come and question a bank that I trusted you. So it is your fault. You need to make me the payment. Or whatever documents called for in the collection, I have presented everything. So you need to make the payment for sure. So no player cannot come and ask any bank. Okay. Fine, guys. Okay. Okay, let's move on. So we are going to cover letter of credit. So letter of credit is, this is what we are going to see now. And we are going to see the specialty, uniqueness, and why exporters will go for letter of credit payment. And this is why you guys are here to know that. Okay. In letter of credit, there is a bank called issuing bank, which is nothing but the importer's bank. So this bank will give a promise to the exporter. So in this letter of credit, exporter will be called as a beneficiary. So this issuing bank will give a promise, undertaking. So that undertaking is called as irrevocable undertaking. So irrevocable is nothing but without the consent of the exporter, the LC cannot be modified or cancelled. Okay, so this is a kind of guarantee or a promise which cannot be taken back by the issuing bank without the exporter's consent. Now you should be able to understand why letter of credit is so special, right? Got the point, guys?
Yes. Yes.
So now as an exporter, when you enter a new market and when there is a LC, you need not bother about the importer's position. So you need not worry whether importer is going to make the payment or not, whether importer is credit worthy, whether importer has the balance in his account, or whether importer will be able to import the goods and sell it in the local market and get the payment and pay me back. So as an exporter, you need not worry about anything. Now, there is a person who is going to avoid the risk of the importer. So that person is called issuing bank. Here, LC can be issued by even an individual, even a corporate entity. Anybody can issue a LC. But for all goodness, exporter has to consider the LC issued by a bank, because bank is a trusted entity in the trade world. Bank is governed by lot of laws. Directly, the country law will be governing banks. So people like the regulators, like the central banks or the governments, they will come heavily on banks if banks are not following. Okay, so banks are the trusted people in the trade world, and now you are getting a trusted undertaking from a issuing bank called letter of credit. So you can just close your eyes, get the LC, ship the goods, and definitely you will get the payment. Provided as an exporter, you need to take care of only one thing. Okay, that we will see. Fine, guys. Any doubt in this?
I have a question.
Yeah.
It's including everything, like for rule, as you mentioned. For example, if I find a customer, they want to buy a UPS, okay?
Yeah.
And they want to pay cash. Do we need to open account or take advance payment because they will pay cash? And also, we don't need to give a letter of credit. We have to only follow the collections. I think we can only provide pro forma that will be made free of tax. Is it acceptable?
So you mean cash, right?
Yeah. I think 1 month ago, I have a customer and he wants to buy a UPS. He said, I will pay cash and he just bring me the goods to me. And he said, we make it without pro forma or without anything. He said, I want to take it free of tax.
Okay.
So I want to know.
So, yeah. So I believe that this is domestic trade, right?
Yeah. It's in Turkey.
So see, there are a lot of issues when you do without bill, and see, mostly the problem will be for the buyer, because once you sell the goods without any invoice, the buyer cannot come and ask you for any service. If something goes wrong, there is no bill and there is no proof of payment that the buyer has made it.
No, he wants pro forma, of course, but he don't want to send it to the bank.
Okay.
Don't let the government.
Okay.
He
So
wants to buy like a kind of illegal.
Okay. This is in fact, it's a wrong practice as a good exporter, where you have a lot of, rules to be followed. When you do international trade, people trust you. So banks trust you. Okay. And if you do this, like getting payment without, proper banking channel, then you need to worry about the money where the buyer gets from. So the buyer, whether the money he is holding, which he is paying, is a right money or a bad money. So that money could have generated from a terrorist activist act. You might not know, right?
Yeah.
So as a good person to enable trade, you are a law-abiding person or entity or a citizen. So you might not want that to happen. People always try to launder money. So this is called money laundering, where that buyer will be acting as a front for a terrorist organization. You might not be knowing that. So it is in all good sense, you can avoid it. But yeah, people used to do that. A lot of people used to do that.
Exactly.
But the problem is, when you send a goods locally using a truck or a train, there are government bodies who are going to ask you for the proper invoice. So without an invoice, you cannot move the goods, right? And that is, in India, you need to have an invoice to move the goods. I'm not sure about Turkey. Definitely each and every government, these are all very basic, controls where government put. I'm sure that Turkey will also follow that.
Yeah, I see.
Yeah.
Okay, thank you. So it's not acceptable.
Yeah, that's not acceptable. You as a genuine exporter, you don't do that. You try to restrict that practice and tell them that
we don't do, and we don't prefer it. It's not it will be affect the company also, not only the buyer.
right. That's right. And you lose reputation. And in the market, people will start talking that, EPI is accepting this type of payments. And
Yeah,
they
sure.
may think that, its quality is not good. And that's the reason they are doing it. Something you will get a bad name that, at the end of the day, you should not get that.
Exactly.
But
Yeah.
you can do like not EPI, I'm meaning anybody can do all these small practices until they caught, but it's not a good advisable thing to do that.
No, I don't prefer. I just asked the question. I don't prefer it.
Yeah, sure. That's right. Yeah, I got the point. Well, I was just
Okay.
trying to give with the example of EPA. That's it, nothing else.
Okay, thank you.
Yeah. Okay, let's see the uniqueness. So we have seen the first three payment methods. As an exporter, you don't have enough protection. So now when you enter a new market, you don't know what is the country risk, how good the country is performing, what is the political risk of the country. Say, for example, in Sri Lanka, there is a lot of turmoil. And in Myanmar, there was some military coup. So there are a lot of things you, as an exporter, you need to worry when you choose an importer country. That could be a country problem, but by choosing a right partner, a right bank, you can avoid it. And using a letter of credit from a strong bank. Say, for example, strong means there are a lot of Chinese banks, there are a lot of US banks, there are a lot of European banks. They are all very good and well, they are very trustworthy. Their capital ratios are very good and they will not fail. And there are ratings given by a lot of international agencies, though they rate the banks. So this is a AA plus, BB plus, like that. So high risk category, medium risk, low risk. So when you choose the right bank, even in a high risk country, you can do a trade. So you should be very careful in doing that. Okay, now let us see what is the special uniqueness in LC. So we have introduced the irrevocable. Okay, so irrevocable means the bank which has issued the undertaking cannot get back or cannot cancel without the consent of the beneficiary. Here, beneficiary is nothing but the exporter who is eligible to draw under the letter of credit. Okay, and it is independent. Independent is nothing but the undertaking given by a bank will not be affected by any other contract, any other agreement. So anyway, the letter of credit is coming after sales contract. The importer and exporter, they agree for the trade, they sign the contract. So in that contract, they will be mentioning, so we will do this trade using letter of credit. Okay. Even though the sales contract is the trigger for letter of credit, but the undertaking given by a bank to the beneficiary will not be affected by sales contract. Not only that, any other undertaking. Okay. Got it, guys? So this is called independent. Mary, you have any doubt? You're there, Mary?
No problem.
You're good?
Yeah, I'm good.
Okay, thank you. So let's move on. And a special thing here, again, one more special thing is payment is without recourse. Without recourse is nothing but once the issuing bank paid you, paid the beneficiary or paid the exporter, the issuing bank at any circumstance cannot come back and say that give my money. So they cannot say, they cannot get back the money. Once it is paid, that's it, finished. Whatever the reason may be, the applicant may come and say that, the boxes sent with the goods doesn't contain any goods at all. So I received only empty boxes. There is no goods inside. Whatever the reason may be, issuing bank cannot get back the money. So this is called without recourse. So now you need to see all these things in the perspective of an exporter. So as an exporter, you are going to enjoy or have the protection with all these things. The nature of the LC is going to protect you as an exporter. So it is irrevocable, it is independent, and it is without recourse. Once the LC is paid, it's done and dusted. Nobody can come and ask back. Okay. Then this is a special thing for bank. Okay. Banks deal only with the documents. So they will not be worried about the goods or services. So as a technical people, as an engineering person, as a sales person, you will be very keen in seeing the goods, so preparing the goods, packing it, sending it. But the LC mechanism is totally away from this method. The LC mechanism is not at all worried about the goods going in the ship or aeroplane. The LC mechanism is revolving around the documents. So banks deal only with the documents. When you prepare an invoice and present it, bank is going to act and rely on the documents, not on the original goods. So when you present a bill of lading, so bill of lading is nothing but a sea transport document. When you load your goods into the vessel, the shipping company will give you a transport document. This is called bill of lading. So which means that you have loaded the goods. So without even loading the goods, the exporter may prepare some bill of lading, some fraudulent bill of lading, and it will present to the bank, issuing bank. So issuing bank, once it sees the bill of lading, and if all the LC conditions are met, issuing bank will close its eyes and make the payment. It will not go and check whether the goods have been already loaded into the vessel. Whether it is true or not, bank will not do that. Got the point? Got it, guys? Yeah.
Yes.
Yeah. And banks act only on the face of the document. So this is what I was saying. They will not go and verify the trueness shown in the document. When you say that 100 metric ton has been shipped in bill of lading or invoice, then bank will just simply trust it. They will not go and verify. They will not verify the source of the document. They will not verify whether the document is valid or not, whether it has to be notarized or certified by a special chamber. They will not worry about anything. If a bank has to worry on something on the document, then it has to be in a documentary form. So you need to make the bank work in such a way that you need to frame your LCs. So for an exporter, it will be easy if LC is very easy without having any complex condition. But when you are acting as an importer, you may have to import some spare parts from somebody else, right? So EPI may also want to act as an importer. In that scenario, you need to have some specific LC conditions. Okay, so you may have to ask for an inspection certificate. So for example, you are importing some chips. So you cannot just simply say it is chips. I mean microchip. So if you just simply say that, the random exporter will ship anything, but you need to put some quality condition, and that has been inspected by some good company like SGS or Intertek. So it is your cleverness, your idea to put that in a documentary form. So that documentary form will be carried in the letter of credit, and bank must act as per the documentary condition shown in the letter of credit. So it will be your cleverness as an importer to put it like inspection certificate issued by SGS company, following the ISO standard, so and so, and having the engineering test done like EN 1058, whatever applies to that particular goods. So you need to put all these things in your LC as a documentary condition, and only then bank will verify it. If you just simply put inspection certificate, any random certificate, even that can be prepared by beneficiary also. Okay. Even beneficiary can prepare inspection certificate, sign it, and say that quality is perfect. Quality is first class. Quality is the perfect in the world. Whatever you may say, something, and just send it. Okay, it is of no use as an importer. It will be of no use if beneficiary is giving an inspection certificate. Agree with me, guys? Okay, let's move on.
Yeah.
Thank you. And this we have already seen. the undertaking given by issuing bank to beneficiary will be independent, and this will not be affected by the applicant and issuing bank's relation. So issuing bank will not come and say that applicant has zero balance, so I will not make you the payment. Just hold on for some time. The issuing bank cannot say that.